If you're 40 or older and trying to figure out how to afford a $500,000 house right now, you need to hear something that might sting but could save you from a financial disaster. The math doesn't work the way it used to, and most people don't realize that until they're already locked into a mortgage they can't comfortably handle. Give me 7 minutes, and I'll show you what's really happening with home prices, interest rates, and your paycheck, and what you should actually be doing instead. This is about why chasing a $500,000 house right now might be one of the worst financial moves you can make, especially if you're over 40. After 8 years working around markets, banking, and personal finance, I've watched people stretch themselves thin for homes they thought they could grow into, and I've seen what happens when life doesn't cooperate. I'm not selling a course or pushing crypto. I'm walking through the real numbers, the ones most people ignore until it's too late. In my last video, Harry wrote in from Los Angeles. Appreciate you, Harry. If you're watching, comment your city so I can thank you next time. Now let's talk about the real cost of that $500K house. Here's what it actually looks like. Say you put 10% down, $50,000. Most people over 40 don't have that in cash, but let's assume you do. You're borrowing $450,000. At around 7% interest, your principal and interest payment is roughly $2,990 per month. But that's not the full picture. Add property taxes, often $400 to $600 a month. Add homeowners insurance, $200 to $300. Add maintenance, about 1% of the home's value per year, which is $5,000 annually, or about $400 per month. Now you're sitting between $4,000 and $4,500 every month. Financial guidelines suggest housing shouldn't exceed 28% of your gross monthly income. To comfortably afford this, you'd need to earn roughly $170,000 to $190,000 per year. Meanwhile, the median U.S. household income is around $75,000. Even at $100,000 a year, which is above average, you'd be spending close to half your income just on housing before groceries, gas, healthcare, or retirement savings. If something goes wrong, job loss, medical issue, major repair, you're exposed fast. This isn't pessimism, it's basic math. So how did this happen? Two forces hit at the same time. First, home prices surged. Between 2020 and 2024, the median U.S. home price climbed from roughly $320,000 to over $420,000, with many cities pushing $500,000 as the entry point for a decent property. Second, interest rates jumped from under 3% during the pandemic to 7% or higher. A $450,000 mortgage at 3% costs about $1,900 per month. At 7%, it's roughly $2,990. That's an extra $1,100 per month, more than $13,000 a year, purely because of rates. Wages didn't rise by $13,000 overnight. Borrowing costs did. So when someone says, buy now before prices rise, they're ignoring what higher rates are already doing to your cash flow. If this makes sense so far, here's the important part. Not buying a $500K house doesn't mean you're failing. It means you're thinking clearly. One option is to buy less house. A $350,000 home at 7% with 10% down might cost about $2,300 per month before taxes and insurance, roughly $700 less than the $500K version. It may not be your dream home, but financial stability beats constant stress. Another option is to rent and invest the difference. If rent is $2,000 and you'd otherwise spend $4,500 owning, that's $2,500 you could invest. Over a decade, even conservative returns can compound into serious wealth without maintenance costs, foreclosure risk, or being tied to one location. Renting isn't wasteful if it creates flexibility and lets you build assets elsewhere. A third option is to wait and strengthen your position. If rates drop to 5%, that $450,000 mortgage falls to around $2,400 per month, about $600 less than today. Use the time to increase your down payment, eliminate debt, and improve your credit. When the timing improves, you'll move from strength, not pressure. Here's what you can do this week. First, run the full numbers on any property. Include taxes, insurance, and maintenance, not just the advertised mortgage payment. Second, ask yourself whether you could handle the payment if your income dropped by 20%. If not, that's a warning sign. Third, if you're renting, stop feeling guilty. Focus on building savings and investments. Financial freedom matters more than owning an expensive house that controls your life. You don't need a $500K property to build wealth. You need to avoid decisions that quietly destroy it. Before we wrap up, comment below and tell me which city you're watching from. For example, Chris Rolfe is watching from Los Angeles. Thank you. If this helped you see the numbers more clearly, like the video and subscribe. Next, we're breaking down the retirement account mistake that costs people hundreds of thousands of dollars, and almost nobody realizes they're making it. This is Michael Stone. Your money works better when you understand it.